Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 16th of August, 2023. I'm Michael Thompson. Every afternoon, we've got the 5 stories that happened today that you need to know about, so let's jump straight into it. Story number 1. The S&P ASX 200 closed down 1.5% today to 7,195 points. It was a very rocky day on the market. Part of this turbulence was due to higher than expected US retail figures, suggesting that interest rates may need to be kept higher for longer, and that certainly spooked investors, along with more concerns over weakness in the Chinese economy. There was a sell-off on Wall Street, which was never going to end well for the local bourse today. A sea of red across all sectors of the market. The worst performer was the tech sector, with WiseTech Global down 3.9%, Cloud Accounting Group Xero off 2.6%. Metals and mining had a bad day too. In fact, the least worst sector today was the real estate investment trusts. There was actually plenty happening in the property space today. Just a quick aside, this afternoon, National Cabinet announced a target for 1.2 million new homes over 5 years. That's an additional 200,000 on last year's National Housing Accord. This is all from July 2024. It's an effort to improve supply and affordability. But back to markets, Mirvac and Vicinity Centres, which both reported full-year earnings, rose 5.3% and 2.5% respectively. Mirvac posted a $165 million full-year loss, but the company said there was still good demand from home buyers for good properties in well-located areas. At the other end of the market, Fletcher Building was down 8.9%, followed by Sierra Resources down 6.2%. Story number 2, the nation's biggest landlord, Dexus, has posted a $753 million net loss, an almost 150% drop in profit, and $1.2 billion in write-downs. The office market is under a lot of pressure, obviously, with the highest levels of vacancy seen since the mid-90s due to the pandemic-driven shift to working from home. The company says it is halfway through a 2-year adjustment to higher interest rates. Its share price fell 3.1%. Citi analysts said Dexus has operationally outperformed the market due to having a higher quality portfolio, they said, but investors remain cautious of office market fundamentals. Story number 3, how about this? This is interesting. A buy now, pay later provider is planning to delist from the ASX and head to the Cayman Islands. That's the future, apparently, for company Splitit, which is a white label product for businesses who want to offer an installment payment option, a buy now, pay later option, essentially. Splitit has signed an agreement for funding from private equity group Motive Partners for $50 million US. The Australian spoke to the chief executive, who said being a private company operating from the Cayman Islands would give it more flexibility and improve chances of getting more capital through the door. He said the company had been premature to go public, which is not something that you hear companies admit to very often. Shareholders will vote on the proposal later this year, which values the company at 20 US cents a share. Story number 4, food delivery service DoorDash has been stung with a $2 million fine for spamming customers and drivers with texts and emails. The company has agreed to pay the fine, and the Australian Communications and Media Authority is encouraging other businesses to check their compliance with spam laws. Was spurred into action on this one due to customer complaints. And finally, story number 5, the financial services regulator has told the nation's biggest insurers to up their game on home insurance claims. They found a string of issues following a review of claims lodged in the first quarter of last year. The Australian Securities and Investments Commission looked at claims lodged with 6 major insurers and found weaknesses in communicating with customers, project management, identifying vulnerable people, and resourcing. They surveyed Suncorp, Allianz Australia, Auto and General Insurance, Insurance Australia Group, QBE and UE. They cover almost 2/3 of the market. That's it for the afternoon report for Wednesday, the 16th of August, 2023. We'll be back tomorrow morning with the Fear and Greed Business News. I'm Michael Thompson. Enjoy your evening.